Hi, everyone. Thank you for joining me for another episode of the Optimize Wealth podcast. My name is Lance Norquist, investment advisor with Bellwether Wealth, and today we're going to reflect on 2025. Specifically, what are some key lessons we can all learn from this year? What started as a wild ride with all the volatility we saw now has most major U.S. indices on track to close out the year with very high double-digit returns. So, as we kind of dive into the lessons that we can all learn from 2025, I first thought maybe we should start with what surprised me most in the markets this year. And I would say resilience, despite all the uncertainty, was probably one of the bigger surprises for me. Again, if we think back to what we saw this year, a lot of geopolitical, political, economic headlines. I mean, more specifically, earlier in the year, it was all around tariffs and trade policies. Mid-year, we started hearing more things about a weakening labor market. We had the longest government shutdown in U.S. history. And then in early November, we started to really hear a lot of concerns around valuations of those mega cap AI tech companies. So again, a lot of uncertainty. Along with going back to tariffs for a moment, we had the Federal Reserve kind of sitting on their hands too, and we weren't really getting a lot of indication of what they were going to do with interest rate cuts because they wanted to see what these tariffs would do to inflation, if anything. So again, a lot of uncertainty this year. However, all that said, market continued to stay resilient, and none of it really translated into any long-term damage, at least in 2025. So back to lessons. What are some lessons that we as investors that we can take from 2025? And as I thought about this, some of the ones that came to mind, first one being patience still works. Talked about a lot of the headlines that we saw this year, and any individual reacting to one of those headlines usually would have done more damage than help to their portfolio if they thought they were doing some type of a defensive shift or a strategic shift. So again, being patient can be very beneficial and a key lesson for especially those high volatility environments. I think another important thing to consider is diversification matters. I know it's a lot of fun to be invested in those big, mega cap, magnificent seven, high growth companies that have done miraculously well from a performance standpoint. But there are intervals of time where they don't do all that well, and the volatility associated with them can be very impactful to your overall portfolio. So it may feel boring sometimes to be diversified into other asset classes like bonds or other alternative investment types like buffered ETFs. At the end though, diversification is key because it's going to allow your portfolio to really do its job and continue to work for you. Even if one asset class is underperforming, others will help keep things more stable. I think another lesson is having a plan, and plans really do help beat any type of predictions that we have. Investors who didn't do the best this year were the ones that had strong opinions, where, the ones that had a plan and stuck to their plan did well. And what do I mean by that? Well, again, from a diversification standpoint, everybody has different investment objectives, risk tolerances, time horizons, and your diversification is going to play a part in your overall plan. And maybe your plan is to only invest for another 10 years, maybe your plan is to invest for 30 years, or maybe your plan is something completely different. But at the end, your plan is going to define what you're trying to accomplish, and then what you're trying to accomplish is going to define your diversification and what you really need to target or what you need from a performance standpoint. So again, I know they all kind of mash together, if you will, but having a plan, being patient and following your plan, and then making sure that you track and stay in line with your diversification are all key lessons that certainly I think we all could learn from 2025, just with the volatile periods that we saw. Lastly, just to kind of recap, what are some things investors should think about, as they think about some of these lessons? How should they reflect on financial wins? And I think when you reflect on a financial win, we need to kind of define what a financial win is. And I know some investors look at it strictly as performance or beating a particular index, but the reality is a win financially could be so much more than that. It could be simply you were able to save double or triple the amount of money or the maximum amount of money that you've ever been able to this year. Or maybe you as a retiree, you were able to draw less on your portfolio, or during those volatile periods where the market was going down, you were able to not draw on your portfolio to try and be more efficient from your cash flow management. So I think that that's something that we should all reflect on, is what are some financial wins for you outside of performance? And that's going to be all for today's episode. Thank you for watching. Again, my name is Lance Norquist with Bellwether Wealth, and we'll see you next time on the Optimized Wealth Podcast.